This is our Forex blog for March 20th, 2012, and like we do most days, we buy the strongest ones versus the weak, and we sell the weakest ones versus the strong. The pound was consistently one of the strongest today, as was the euro. The Swiss was also extremely strong, and the Australian and New Zealand are the weakest ones. Let me link all these together so I can scroll one back and they'll all scroll back with it. So starting the day off, you can see the Australian and New Zealand weak on all time frames, as is before midnight it was as well. It looks like the Australian slightly weaker than the New Zealand at that time. So basically you want to sell the Australian and New Zealand versus the pound throughout the day. Before midnight it looked like it was weak. It really started getting strong here at 3, and the euro was strong even before that. So the euro New Zealand is a good one to buy. The euro's on top. You can see that this went pretty much straight up, starting from that point here a couple hours before midnight where the New Zealand and also the Australian got weak. Here's a euro Australian. And basically we just have two methods. Once you find a currency that's strong, wait for a 15 to 25 pip pullback, and I always wait for the trend line to get broken. If it's going sideways, I always wait for it to go above those bars high. So I would have actually been long right here at 15. Really didn't take off initially. You would have had a small win. And then during the pullback here, you can see price actually did break that one. And then it went sideways and then shot up. This is about a 40 pip move right here. So there's really two entries once you locate a currency. Little sideways consolidation, either flag pattern or rectangle, or what I prefer is a pullback. Here it made a higher high, pulled back, you get in, you make money, pull back, you get in, you make money, and you also have another flag pattern here. Usually double tops are the end of a move. So if you see a double top and there's no pullback whatsoever, when it does break out, you definitely want to buy it. This one went up 1 wave, 2 waves, 3 waves. This is a 4th wave, so anticipate the 1.618 fib target is the maximum high. It did shoot a little bit beyond that and then pull back. So this 1.2621 is your profit target. If you buy it right here, you're risking about 10 pips and you're going to make 26 pips if the trade works. And in this case it went beyond that. Anytime it goes beyond the 1.618, you might want to just kind of watch it. If it kind of seems like it's up over, get out of the trade somewhere up in here and lock in your profit, because usually it's going to pull back at least 38%. So those were two of the high probability trades. Let's scroll forward a little bit. You can see the pound later today became very strong, and you can trade that against the Australian and New Zealand as well. They were the odds-on weakest ones. So pound Australian, notice straight up, and notice the pullback, a little sideways rectangle pattern. You might have got into this trade right here. Your stop's underneath the low here. It's very possible you might use a time stop for 30 minutes or 40 minutes. If it doesn't go your way, you get out, small loss, you buy it again. And like I say in class and also in the Forex blogs, usually the 1.618 is your maximum profit. You can see this one a few more pips above it, and then you got your pullback. You're better off getting out at and slightly above the 1.618, waiting for a pullback, and because then you can buy it again. And this one, went up again. It's not always going to go to the fib target of that last wave, but this one went to the 1.382, almost to the pip. So there's your profit target. If it gets, the more waves up it goes and the more pips it goes in one direction, the more likely the first fib target is going to be, the end of the move. And this is a nice illustrative example of our Elliott two-wave Fibonacci pullback system in action. Once you have a strong currency like this and it's moved statistically too much, if I put our containment bands on here, more than likely it's above the 2.0 containment band. So I'll just put this on here and show you. I always make the 2.0 ones white, and in fact this one may have even went above the 3.0. In my experience, when it gets above the green 3.0 band, it's not a matter of whether it's going to retrace. It's only a matter of when. So usually I'm watching these things like a hawk. I might go short right here, maybe made 5 or 6 pips or lost 5 or 6. Short again here at 51.15, You can see it pulled all the way back to 87, so that's a nice 25-30 pip win. And I might have shorted right here with a small loss, shorted again right here with a nice 30 pip win. When it gets above the 3.0 band, you don't want to be greedy. And that's even more of a reason to, because it's above the 3.0 band, I would have actually drew my fibs on this first wave and not this swing here, because it could stall here, or like you can see in this example, it just touched the 1.618 of this tinier swing here. Now the New Zealand was also weak, so the pound New Zealand also very high probability one to be going up. And notice how the 3.0 band is just a phenomenal place to get out. Most currencies most days hit the 2.0 white bands and then they reverse. It's very rare for them to continue beyond those. Most of the time you can see a little bit of reversal. Notice the 3.0 band, price did not continue beyond it. This is a pretty volatile currency. If I put the euro dollar on here, notice the bands here, the white bands, very close to the lower band, tagged the white band. Most of the time, the white band is the one that's going to get hit, and the market's going to reverse. Let's put the euro yen on here too. Notice the white band gets hit. It pretty much got hit at the low yesterday. Most of the time, price does not go beyond that. And the containment bands are also another nice tool because it shows the hourly moving average on your 5-minute chart or range chart or tick chart. Watch our other videos to learn what those are. When it's above the hourly, it's more likely to go up. When it's underneath the hourly, it's more likely to go down. It's a wonderful support resistance and place to buy. Buy here, small profit, and when it breaks down right here, you go short, because when it breaks the hourly, everyone typically goes short, and that's why there's usually big moves when that happens. Let's take a look at the Swiss too. The Swiss was very strong consistently today. So you could have sold the Australian Swiss. Notice just down, down, down. And also notice that when it hits the green band, you don't want to be greedy at these points. And when it's down near the lower band, it's actually kind of a risky trade. Most of the time I do not get short down there because there's not that much upside. I prefer a deeper pullback. I would probably be more apt to sell this one than I would this little sideways range right here. And when you draw your fibs like this, most of the time when it is way beyond the green band, when it gets down here to the 1.618, again, very high probability place to get out, and even flip and do a counter trend long if you choose to. Let's take a look and end today's Forex blog with the New Zealand Swiss. Very weak. The Swiss is strong, and also note the 3.0 band is just the end of the move. Here's some trades I might have taken in this one. Once it's going down and it's very weak currency, you want to draw your fibs on here. Most times the 1.618 is the end of the move. So knowing ahead of time that 74.45 is probably 80% likely maximum low of the day, did go a few pips underneath that, you could trade it right here. I would have got out with a small profit. Shorted again right here, out, and then when it went sideways, I would have went short right here. Initially put my stop above the high. It's kind of going sideways right here, so you want to yank your stop down and also redraw the fibs off this last wave. Don't be greedy. Usually the 1.382 fib target is a good place to get out. This last trade we're short at 74.61 and we're out at 37, so it's about a 23 pip profit. Keep in mind that if you get 10 pips net per day, you can double your account every 2 months using very tiny amounts of leverage. Here's a $2,000 account, and you can edit these and put in any amount you want. If your goal is 10 pips per day, which is really the minimum you should seek, some days you're going to have 30 and 40 pip wins, and other days maybe lose 10, 15 pips. But shoot for 10 pips a day net. That's 50 a week, 200 a month. And you can see your account pretty much doubles every 8 weeks. Obviously you're trading more and more lots, and that's why this has such a compounding effect. But $2,000 grows to $258,000 if you can net 10 pips per day every day, or make 20 pips one day and lose 10 pips the next day, and you make 20 the next day, lose 10 pips, maybe you make 30 the next day, and so forth. As long as you're netting 200 a month, this is what will happen using a very small amount of leverage. With a $2,000 account, you're starting with only 4 mini lots. And most of our systems have 10 pip stops, which means With 4 mini lots, if you're risking 10 pips, you're risking about $40, which $40 divided into 2,000 is about a 2% risk, which is a very reasonable low amount of risk to have on any given trade. So this is using our 2% money management position sizing, and that's why we have this as a default in this.